What is going on, investors? Hopefully, guys are having a great day out there. It is time to talk about Enphase Energy, ticker symbol ENPH. Over the last year, stock's actually down 27%. Year to date, this thing's down 23%, but pull it back to the 5-year and hello, you're up only 9,608%. So if you've been in this one for a long time, you might be able to afford a nice little solar system on top of your house. Now, after reporting earnings today, the stock is absolutely popping, up about 13% in the after hours after being up about 2.65% during the regular session. We'll jump over the stock chart. We'll see that this one has made kind of a reversal pattern, and it reversed at an area where we'd expect this to reverse. And so we'll talk about, can you buy the dip on this one? It is still off the highs. The stock, again, is down for the last year and year to date. Can you buy the dip on this one? We'll talk about this from a technical perspective. We'll also run through the earnings. Okay, Q4 earnings just came in. We'll talk about the revenue, the profit. We'll take a look at it line by line here on the financials. It looks really good. And then we'll also run a little bit of news on this one. Obviously, when you're looking at regulatory and looking at solar, a little bit of government stuff, there's a little bit of stuff coming out here in California that I think you need to be aware of. Now, the revenues came in at $412 million. That is up 55% year over year. We'll get over here and show you those revenues. $412 million in this quarter. Last quarter, they were at $351. A year ago, they were at $264. Hello, growth story over at Enphase. You can see why this stock has performed incredibly well over the last couple of years. Now, what also is performing well over at Enphase is they've got really high gross margins over here at 39.6% in the most recent quarter. Non-GAAP, they were at 40%, and they're guiding to that in that range for the upcoming quarter as well. For the upcoming first quarter, so that I just talked about how they had a quarter where they did $412 million. We'll walk you through all the revenues and the profits here in a second, but the upcoming quarter, the Q1, they're expected revenues to come in between 420 all the way up to $440 million worth of revenue. So that would be nice. I'm sure that's really strong year over year growth, but even quarter over quarter, you're bumping up maybe even 10, 20, even $30 million over the previous quarter. This company is doing a really nice job. Now, they're in the solar industry, make a lot of little components and stuff, these little brackets and other products for the solar industry. And obviously they have a president in the White House who, at least at most times, is very favorable to this industry. He extended solar panel tariffs that were first imposed by President Trump. In some cases, this was applauded by the solar industry, and in some cases it wasn't, but it should help companies like Enphase. Now, I think the big story we got to talk about here with Enphase is out here in California, regulators are trying to cut rooftop solar subsidies, essentially delaying the payback period to much longer than 10 years, 20 years. They're going to put a tax on new systems. They're going to reduce the amount of money you get after you produce excess solar, you feed it back into the grid. You're actually going to get less money than what you currently do. This, by many accounts, most people believe would actually reduce the demand for solar out here in California. And you might say, well, California is just one state. Well, 1.3 million homes have solar systems out here in California. Guys, that's good for 45% of the entire United States total. And so obviously, if California starts to slow down their solar installation, now there is regulation. Any new building out here in California has to have solar on its roof. So Enphase will always have business, and the solar market will always have business on new construction. But quite frankly, with all the environmental and certainly the expense to build new construction out here in California, the much bigger market is existing homes and retrofitting them with solar. We'll keep an eye on this. I think that the commission decided to delay this. They needed more time. This is not popular with any of the solar industry people, and certainly people that are very favorable to the environment out here in California, which is very extensive. This is not a popular policy out here, especially from the people that vote for these type of people that put these policies in place. We'll see if they decide to cave or if they cave to the side of special interest, which is my guess is feeding their pockets and kind of forcing them to do this. This is something that is going to overhang the solar industry. And until this clears up, I think you want to step a little bit carefully in the solar industry because, like I said, what goes on out here in California is nearly 50% of the United States total. And I don't think that's necessarily going to change because the weather out here in California just simply is obviously ripe for solar, and it's the perfect climate for that. And quite frankly, there's a lot of states out here in the United States where putting solar on your roof, unless it was incredibly inexpensive, would not benefit you from a financial perspective. So California is the big juggernaut that, and I don't think that's going to change. Now, let's jump into Enphase's financials. They came in with this revenue at $412 million. They have those really strong gross margins. We had $249 million worth of costs. We get down to our gross profit of 163. We see over the last year went from 121 all the way up to 163 quarter over quarter. This is just really, really strong stuff. 140 up to 163. Let's see how they're keeping their total cost and operating expenses in check. You notice over the last year, they've really ballooned. Okay, yes, we've grown these revenues by quite a bit, about 55% to be in fact. And so our revenues grew by about 55%, but our costs more than doubled. They went from 42 million up to 105. We'll give them a pass there. It's when you're scaling up these businesses, certainly with the competition that is out there as well, you got to move fast. And then when you've got regulators looking to maybe take away subsidies, well, look, you got to grab all the market share you possibly can until maybe the industry starts to slow down. But you notice quarter over quarter, this company's actually done a nice job. They went from 103 to 105 despite growing their top line by about 60 million or so. They even grew their gross profit by about 20 million. Well, their total operating expenses barely budged. They went from 103 up to this 105. That's absolutely fantastic. We get this income from operations, super strong, $57.7 million. Last quarter, you were at $37 million. So most of this revenue growth and gross profit actually flowed all the way down to this income from operations. I think if Enphase can keep these expenses normalized in this 100 million, look, we'll give them factor that they've got to grow these quarter over quarter, but if they can keep them and stop ballooning them year over year like they did over last year, well, look, really strong income from operations. You notice last year, though, on far less revenue, in fact, 55% less, they actually had more income from operations because these costs really hadn't ballooned. We'll see that a lot of these costs, or some of them, I won't say a lot of them, some of it is stock-based compensation. We'll see that when we get to cash flows. Now, this company nets out money, man. They net out really strong net income, $52 million. You see here for the year end, $145 million. It's just a really strong company from a financial perspective. Now, obviously, we've talked about the stock performance of the last 5 years. It's really benefited the stock. But if you've just gotten into this one over the last year or even year to date, you're actually down on this one. So we'll talk about that from a technical perspective as well. I think when you see results like that on a stock, you want to really dial in on the technicals. There's a reason why we go over both here on the channel. The fundamentals on this company look great from a revenue growth perspective, controlling cost. I mean, year over year, they didn't really control the cost that well, but we're starting to see them normalize quarter over quarter. I think that's strong, and I think they gave guidance that it'll likely stay in line there. Fundamentally looks great, okay? From a technical perspective, we really need to dissect that, especially with the fact that the stock is down over the last year. Balance sheet looks pretty good to me. Cash and cash equivalents, nearly $1 billion. They have plenty of inventory, it looks like, to deliver as well. They have a fair amount of debt, okay? Looking at over nearly $1 billion long-term, over $86 million non-current. That's a lot of debt. They actually have almost as much debt as they have in cash. In fact, they have more debt than they have cash on the balance sheet. So this company's really levered up. It's just another thing that you want to think about, okay? This is not a crystal clean balance sheet, but to be quite frankly, if this was a crystal clean balance sheet, the stock would probably be far higher than it is. They also have strong cash flows and strong profitability and strong gross margins over here and a strong product in its marketplace. So I don't mind the levering up of the business as well. They've done a nice job, I think, in those sense. Now, in terms of cash flows, beautiful cash flows because this company pays a fair amount in stock-based compensation. So off $52 million worth of net income in the quarter, they paid $37 million worth of net income. They also have some non-cash interest expense and they have some depreciation as well. That makes the bulk of kind of the add backs there just really strong. Okay, and that leads to really strong cash flows, $97 million in the most recent quarter. You see for the full year off $145 million in net income. They had $114 million in stock-based compensation. Boy, those Enphase executives are getting rich off this stock. You end up cash flows at $352 for the whole year. That's $352 million. Now, over the last year, they have bought back some of the stock. So they've used some of these cash flows to actually buy back the stock, but also keep in mind that my guess is when they award these executives and to the employees to a certain extent, stock-based compensation, some of that is basically getting flowed back into the buyback. So they're using company money to buy back the shares that they awarded to investors. And that's nothing unique to Enphase. Okay, Apple is doing that. Every company, Facebook, everybody's doing that. They're buying back the shares that they essentially awarded to the executives and management at the company. It's not necessarily a negative. It's just something to think in mind when you see 500 million on a buyback. Just keep in mind, while not all of these shares were likely sold by executives, just keep in mind some of it were basically sold into that. Now, in terms of a technical perspective, very nice. Okay, yeah, we were up here at the highs at 281, came crashing down, hit this level of support down here, which makes a ton of sense down here at $120. And if you picked it off at 120, pat yourself on the back. You are a risk taker a little bit, because if you broke through this 120 level, we could pull up a chart of Facebook. We could pull up a chart of Alibaba, PayPal. There's a lot of stocks that hit critical technical levels and then burst right through them and went down. So, but what I liked is we started making higher lows, and now the stock is trading closer to about 165, which is this area that I'll mark out here. It's somewhat of an intermediate area. In fact, it's smack dab in what I would say is the middle of our range from 120 all the way up to 200. You're sitting here at 165. Do you buy at this spot? Maybe. I think your upside, though, is back up into this 200 range, where I think you're likely to meet some resistance up here. The stock could eventually pull back, but I do like, from a technical perspective, it definitely looks like this down leg, at least temporary, is over, because we started making higher highs and then all of a sudden we gapped up today. Now, the very bullish sign on this one, I think you need to get above 200. More specifically, you need to reattack these all-time highs, okay? If you get above 200, I think you could have a nice little run on this one. This could come back in here and approach the highs at 250, 240, 260, somewhere in that range. I would expect it to pull back at some point. I don't mind this stock. I don't think it's like wildly undervalued, okay? You've got a 62 forward PE. My guess is that'll come in a little bit with these earnings that they just had. The guidance also looked really strong. You got a $19 billion company on this one. So it's not a small cap, but it's not a mega cap. So it's like kind of a mid cap stock. If you have a mid cap portfolio and you like the clean energy, I do like this play. It's a strong performer. It's got profits. It's got cash flows. It's got everything that you could possibly want. I think, though, me personally, I would wait until we get clarity on this California. And you might ask yourself, well, the stock might run into that news, or it might run immediately following that, but at least you clear a little bit of risk off the table. If California really does go through with this, it is going to hurt the rooftop solar business out here. And quite frankly, considering it's close to 45% of the market, it's definitely going to hurt Enphase's business. You also want to keep in mind when this gets enacted. It could be that this law is passed, but it's not enacted for 3, 4, 5, 6 years. Well, that would still give Enphase plenty of runway on their business. So I just keep a really close eye out here on California on this one. I can't tell you how this one will go. I'm actually shocked that the legislator over in California is doing this. But look, the power companies are in the pockets of all these people, not the environmentalists, not the voters. All these people care about is money. My guess is the energy industry is just pouring their pockets full of money. We'll see who wins out in the end. All in all, Enphase, solid mid-cap stock, not a cheap valuation, but from a technical perspective, has reversed. I think you could play the breakout, some momentum on this one if you feel like it. I would absolutely have a stop loss down here at about 120 on this one. You would not want to see it get down, probably actually a little bit south of that, probably closer to 115, 110 on this one, because we've looked at several charts over the last couple of weeks. Once you break these lower end of the range, so look out below. And certainly something like this California rooftop subsidies going away could trigger that type of selling in Enphase. Hopefully you enjoyed this video. Be back again soon with more. Good luck with your investments.